Hello amazing traders and welcome back to the course. In this video we're going to be learning about candles and candlestick charts. Okay, so last two videos we learned about MT4 and the trading view platform. Now while looking at these platforms we saw what candlestick charts look like. Okay, so I'm just going to go back to MT4 here for you to see what we did the last time. Now you can see that you can see a chart. When I zoom out, what you can see right now here is a chart. Okay, so this is a chart. This is a chart. Now, what type of chart is this? We saw that there are different types of chart. We saw the bar chart. Okay, the bar chart. As you can see, this is the bar chart. We saw the line chart. Okay. We saw the line charts. Now we also saw the candlestick charts. Now these are what we call the candlestick charts. This is a candlestick chart, and we're going to be using the candlestick chart strictly for this course. And in this video, we're going to be learning about the candlestick and the candlestick chart. Okay, so going back to our presentation now. What is a candlestick? This is just what a candlestick is. Let me zoom in here so that you see what we have here very well. Now this is a candlestick. This is just what a candlestick is. Okay, now this is a candlestick. There are two types of candlestick. We have the bullish candle or the buy candle, and we have the bearish candle or the sell candle. So the bullish candle represents a candle that ended in the favor of the buyers. Okay, so you have to understand that each candle is a battle. Okay, each candle here is a battle between the buyers and the sellers of this currency pair. Okay, so every candle here is a battle. In each candle there was a battle between the buyers and the sellers of each currency pair. If you settle down, let's just go to the 1 minute chart so we can see how a candle gets formed. Okay, so if you settle down and see and observe what is happening during the formation of a candle, you observe that this is just like a battle. As you can see, it's now black. Okay, it's now black, and after some time it might go up to become white, to become bullish. It might go down to become black, it might go up. Just observe what is happening here. Okay, just observe what is happening here, and after 1 minute it's then going to form. Okay, so after 1 minute the battle will then be over between the buyers and the sellers. Okay, so at the end of the battle, either the buyers and the sellers get the trophy. Now as you can see, this one just ended in the favor of the sellers, so we can now call it a sell candle. That doesn't mean during the battle the buyers did not make some gains, but it just tells us that at the end of everything, at the end of the whole battle, the sellers won. Okay, and then this also is going in favor of the sellers, as you can see, but also the buyers are then pushing it up, as you can see, but it's then going down and just going down and going up. So these are things you have to observe. As you can see, buyers are pushing up, buyers are pushing up, it's not going in favor of the buyers. And then at the end of everything, let's just wait and see how this candle completes. Okay, so you can see it's going in favor of the buyers, so then going in favor of the sellers. Okay, so let's just wait and see. And now as you can see, now this one ended in favor of the buyers because it now ended as a white candle. Okay, so that's what candlesticks, that's the concept of candlesticks. Some will finish in favor of the buyers, which are called the bullish candles, and some will finish in favor of the sellers, which are called the bearish candles. Okay, so that's a basis for you. Now this is an example of a typical bullish candle, and this is an example of a typical bearish candle. So we sometimes denote the bullish candle with a green color or a white color, like I've done here, and the bearish candle with a red color or a black color, like I've done here. So that's what you have to understand. Okay, so for a bullish candle, you have to understand that the open price is here, and then the close price is here. So the close price is higher than the open price. Okay, now we also have the low prices and then the high prices. Now these are the lowest and highest prices during the formation of this candle. So for this candle, in this case, it started here and then it went down to this point, and then that to form the lowest price. Probably at this point, someone might be thinking it's going to complete as a bearish candle, but no, it ended as a bullish candle because the buyers pushed this candle from this down here, up here, and then even to this point of forming this high price. Okay, so they formed this high price, and then the sellers now pushed the candle here, and then it closed here. Okay, it closed here as a bullish candle because the close price was higher than the open price. Okay, so that's what you have to understand about candles. Okay, and then of course it happens within a time frame. We looked at time frames in our past video, and it happens within a time frame. You can see this is a 1 minute time frame. That's why the candles have been closing. So after every 1 minute, the candles close as either a bullish candle or a bearish candle. When we come to an hour time frame, for example, each of these candles will form after an hour. So you can see that the price might come here and go down, come here and go down, but at the end of everything is going to finish as a sell candle. So that's the idea behind candles. So these candles are a representation of the biases of the wars being fought on the battlefield of Forex. Okay, so the war is between the buyers and the sellers. So whoever win at the end of that time frame have the candle attributed to them. For the bearish candle, the open price is actually supposed to be here. I think I made a mistake on this illustration. So this point instead of close price, it should be open price, and then this open price should be close price. That's the mistake I made here. But the high price is still the high price, and the low price is still the low price. And then you can see that we call this the lower wick, and we call this the upper wick or the upper shadow. So it's either the wick or the shadow, and then this one we call the body. So the thickest part, the biggest part is called the body. So also with here. Okay, so the bearish candle actually starts here and closes here, while the bullish candle starts here and closes here. So it starts below and closes up, while the bearish candle starts above and closes down to signify strength in the direction of the sellers. So I'm probably going to edit this so that when you come to see the illustration, you're not going to be confused. Okay, so this is a mistake in my part. I'm going to edit this. So that's it about the bullish and bearish candle. So let me just go to the next slide for you to see. So this is an example of a candlestick chart like we saw before. So you can see here the bulls are denoted with a green color, while the bears are denoted with a red color. You can actually use red for bulls if you want. It all depends on what you want. Remember, you can actually edit these colors. It depends on what you want, but most traders have been using green to denote bulls and then red to denote bears, or buyers and sellers respectively. So that's it for this video, and hope to see you in the next.